Hey guys, this is Andrew for TradingSenses.com. So in this video, I want to talk about breakouts. I want to show you guys how to identify a breakout and how to trade it. Also, I want to show you guys how to avoid fake breakouts, which are bull traps or bear traps. Let's get into it. My first example, I want to show you guys how to identify a breakout. So I'm going to take the Euro USD chart. I did some technical analysis on this one. It was, I think, my third or fourth video of this channel. And I was basically saying that I'm bullish, guys, on the euro dollar above 118. And that I see the euro dollar trading around 130, 135, maybe at the end of next year. The reason behind that is actually a breakout. So I'm going to show you guys how I saw it and how I would trade it. So when you look at a chart, all right, so I'm going to get rid of this first, but you need to identify a trend. You need to find some obvious resistance or support levels. So here you can see that the trend is bearish, all right? And you can see that here you have some kind of a resistance. So you just draw it, okay? So I'm trying to make it connect as best as I can the highs that I see here. So this one is not perfect, but at least we are almost touching this one. We're touching this one. We're touching this one here. And here we have our breakout. So let's check this in a shorter time frame and let's see what happens. All right. So this is a breakout. So basically we have a support level that is broken and we have the confirmation. So for example, here on the daily time frame, my confirmation would be given by given the length of the move. This is more a weekly move, so it would be given by a second candle that is trading above. So first one here, this is not the breakout yet, and second, then it is a breakout. Okay, I'm going to show you guys why you should not buy the breakout, what can happen, how bad it can go if you do this. But first, a breakout occurs once you have two candles in the time frame you are watching that are trading above it. So this is a nice one. And then once you have identified it, you go to a shorter time frame and you try to enter your trade. So you need to find some support levels that are close to the level you want to buy. So for example, the breakout level is a nice level to buy, for example. All right, very basic here. Okay, so let's put this one in green. So this is the breakout level. So everything that is touching this would act as support. All right. So that's why here it came back and here it came back. Another one is just you keep the resistance level that you had. And once a resistance is broken, guys, a resistance becomes support. All right. I told you this before. This is very important in technical analysis. And this is what we use to trade breakouts as well. So here you can see this was my resistance line. All right. And here, look. It got just touched a little bit, then second time. All right, so you have 2 days, actually 2 days you could buy here this level and just put a stop loss here. You see, so this kind of trade is quite safe and it allows you to enter your trade after the breakout has been confirmed. Another way to do this, you can just use some moving averages. So here, for example, the 20 is definitely too close to the price action, but you could have used the 50. So you could have both here, okay? Then maybe you would have put a stop loss here, which is not good. So you can see here, for example, it wouldn't be nice to use the 50, all right? Because the 50 is far from the other support levels that I have using other techniques. So I have one here. So I would be a buyer close to here. So if I have a moving average coming here, it's even better. But if I don't, I won't buy here, all right? Another technique you can use is just use the fibs. Guys, fib retracements. So you just identify the last wave before your breakout. So here the last wave is this one, all right? So I take from here to here and I just buy as usual at the 38.2% and the 50% and I stop at the 78%. So you buy here 116.8, so you have, you know, one more level coming here. You buy more at 115.8 and you stop your position around just below the 61.8, all right? Because this is a level we often go to. We rarely go below if we are like if the market is bullish. It usually doesn't come back here. It all depends on like which wave it is. I'm not gonna go through this here, but in this situation, when the market is very bullish because we broke a major resistance level on the weekly time frame, then usually the good levels to buy at 38.2 and 50. So here you stop here. So basically here I have 3 indicators telling me that this is the level to buy, and guys, it worked in this situation. Now what I want to show you guys is what you should not do. All right, so I'm gonna go on the S&P 500. So this is the futures market. So for those who watched my other videos, I was basically telling you guys that I see here some weakness because I see a wedge pattern that is here. All right, so wedge pattern is a pattern that has a support level and a resistance level that are converging to the same point. So it has to end at some point. This kind of wedge pattern cannot last forever. That's what I was saying in my other S&P 500 analysis. So here, a breakout would be can be on both sides. It can be on the downside or on the upside. As you can see here, guys, we had what we call a fake breakout. So don't fall into this trap. All right, you need to wait, as I said, to have 2 candles that are in the time frame you're watching. So here you can watch 4 hours, you can watch 1 hour, it doesn't really matter. But what you can see, for example, the 4 hours, is that we have here a breakout. Okay, so here if you sell here, guys, I mean, first you need to be very quick to be here because this move was very sharp. So basically here you won't have time to sell here. So maybe you would sell here or here. And guys, how would you feel the next hour when the market just is coming back with a lot of power back like to the wedge pattern it just had breakout off? You would feel really bad and you would take a bad decision, that's for sure. When things start to be bad for your trade, it's usually the time you take the decisions you know are not good, but you still take them. For example, here, just stay in the trade and hope this is just like, for a while, and that eventually we had this breakout. But guys, you didn't have it because you have only 1 candle here that closed here, second hour. Look how strong this was. All right, it didn't come back to the wedge pattern, but just below, and then it came back. All right, if you look at the 4 hours time frame, which I think is better here because it's just visual. I'm used to this kind of stuff, and I can tell you that here, basically, if your candles look, you can't really see them, it means you are not using the right time frame for your chart. Here I can see each candle very properly, so I know that the 4 hours time frame fits very well the switch pattern I'm checking. So it's even a better signal. So once you have 2 candles in a row that are below it with the closing price of the second candle that is below, this is the confirmation, and then you enter your trade using the techniques I gave you. So for example, you can enter your trade here because this support level became resistance, or you can use fibs. So you would take this candle here, and you sell 38.50 and you stop your position here. So here you would have been stopped because this is a fake breakout. All right, so this is the kind of traps, guys, you should not fall in. This is a bear trap. All right, be very careful, wait for the confirmation. And yeah, otherwise moving averages. All right, so very quickly I show you again, guys, in this example here. So here this is a very nice breakout because as we can see on the longer time frame, we broke above this level, and then we just so the resistance becomes support, so we can buy here, here the level of the breakout is good to buy, and we can use fib on the last wave and buy the 32.2 and 50% and stop at just below 61.8. so here you would stop here. Okay, you buy here, you can even buy more here, and you stop everything here. All right, and then you try to find the next resistance level, and this is the level you are going to take your profits. So it's here. For the euro dollar, it's 125.5. Okay guys, that's it for me. I hope you enjoyed this video. I hope you understand now what is the difference between a breakout where you have the confirmation and a fake breakout that you should not trade, and the different techniques you can use to get back in the trade once you have the breakout. So I repeat, the resistance becomes support, or the support becomes resistance. So this is the first thing you can use. Moving averages of fibs. All right, you buy the 38.2, 50%. You can even buy the 61.8, and you stop everything just below. All right guys, that's it for me. Stay close to shore. I see you guys.